My name is Kathleen Summers. I'm an elder law and estate planning attorney with Summers and Associates located in Acton, Massachusetts. Welcome to Older and Loving It, a program designed to address the legal and life concerns for seniors and their families. On today's show, we're going to discuss life insurance, whole life insurance, universal life insurance, term life insurance, second to die policies. The world of life insurance can be confusing and overwhelming to the majority of us. Most people understand the basic purpose of life insurance, to provide money for the loved ones upon your death. But few really understand how it works, what policy type is best for them, and how much to buy an insurance. We are very fortunate to have today's guest, Ken Anding, a Senior Vice President with Boston Partners, to discuss life insurance and answer both basic questions, such as explaining about the different types of policies, to more complex issues, such as using life insurance to pay estate taxes and second to die policies. Ken has been assisting families and individuals obtain financial knowledge and security for the past 21 years. As an insurance advisor, Ken feels he is also a teacher to his clients. Through analysis and explanation, he helps his clients to identify what insurances they may or may not need, and in this way, help them protect their assets. He is also a perennial Achieving Client Excellence Conference qualifier. ACE is a qualification unique to the John Hancock Financial Network that acknowledges the best of the best in its national network of financial professionals. He ranked in the top 50 in JHFN's national network, including over 1,000 financial professionals. He has ranked in the top 100 since 2010. Additionally, Ken is currently serving as the president of the Merrimack Valley Estate Planning Council and is a board member for the Alzheimer's Association. Welcome, Ken. Thank you for joining us today.
Thank you for having me.
Why don't we start by talking about what is life insurance and why do people need to look to purchase this?
Life insurance is a vehicle that enables people to have a death benefit without having to set aside all monies in order to pay for these things. It is used to create an estate. It can be used for business loans, for collateral assignment. It has a lot of varied uses, but creating an estate, income replacement, those are just some of the things that life insurance can be used for.
And most people think of life insurance through an employer. It's something that they get through their group life insurance. But there's also, of course, independent life insurance policies.
Right.
Can you tell us a little bit about the difference between those and why someone should maybe think about getting an independent insurance policy over a group life insurance policy?
Right. As you know, in this increasingly down environment, corporations are cutting back on benefits. A lot of people are now being hired as consultants, and as a result, they don't have the umbrella, the ability to just be layered under a corporate environment where they get group life insurance, group disability, and so forth. So if someone is a consultant, they're really not going to have any life insurance unless they have an independent advisor to sit down with them and do a proper analysis on what kind of insurance they need, how long they might need it, along with their debt obligations and their children.
And I know there's a difference in certainly types of policies. For instance,
Right.
The most common I think people know about are term life policies and whole life policies. Can you tell us the difference between those?
Right. Term life insurance is just pure death benefit only. So that if you get a term life policy, you buy it today, no matter what happens, there is never any cash value inside that policy. So you want to start by grouping your policies into two groups, one non-cash value and the other one cash value. So your term, pure death benefit, when you die, the face amount is paid, but whole life policies have a second element, and that is there is cash inside this policy. So that's the basic difference, but once you get into cash value policies, now you have to start looking at what kind of cash value policies there are. There is universal life, there is variable life, as you mentioned earlier, there's also survivorship life. All of these can be cash value, whole cash inside the vehicle.
So when you talk about cash value, does that mean that there is a benefit that can be used with the policy while the person is alive?
Absolutely. People have the ability to actually take a policy loan if they are cash strapped. Certainly we don't encourage it, but it is there as another safety vehicle. And in this environment, many people are for business purposes. They've used their life insurance to sustain a business when times are difficult, and they can always replace that depending on what the policy provisions are.
But that would, of course, affect, if they took a loan, the value of that policy upon their passing. Is that correct?
Generally speaking, yes. If you take a loan out, that loan is going to be subtracted from the face amount.
Okay. And with term policies, am I correct that they're only valid for a certain period of time?
It's an interesting question. What happens with term is people say, I just want the cheapest policy I can possibly get, and that certainly would define term. However, things happen when people are insured. Sometimes someone may have a stroke. They may suddenly become insurable. Maybe they've got a 20-year level term policy. Well, what happens at the end of that 20 years? Guess what? When they want to hang on to that policy, knowing they may never get another one, the premiums go through the roof on level term. It's a commitment from the carrier. We will charge you so much per year on a level basis. But after that time, the premiums double, triple, and they really go off the charts. So that's why you really want to carefully consider the type of insurance you're getting.
So oftentimes people will think about maybe buying a term policy to get them through the years while the children are young and until they get through college.
Right.
But then you're saying they may end up being now in their 50s, maybe 60s, and not be insurable or not have enough insurance.
That's correct. One of the things that you need to consider when you're doing a life insurance analysis for a client, you need to ask yourself, is there going to be an estate tax issue? Is this person always going to need insurance? When do the children get independent? When are they through their college years? Is there a need for income replacement for the spouse? So all these factors play in, and of course you have to give the client choices. That's the motivation, is to teach, not to sell. Once that happens, you're on the same side of the fence with the client, and really you can come to the right conclusion.
You mentioned estate taxes. So how is insurance used in planning for estate tax possibilities?
Attorneys, when they're doing the estate plans, and as you know, attorneys can do estate plans for their clients and say, well, here's the net worth, and then they calculate the estate taxes, and they look at these and say, well, you're going to have a substantial estate tax when you and your spouse die. When they figure these things out, many times life insurance is the solution. If they're going to do life insurance as the answer, typically they will form a trust that will apply for the insurance, will hold the insurance, and keep it separate from the estate. So that in that way it can be a vehicle to pay all estate taxes, to keep from liquidating things to pay.
So it's a way of making sure that the whole value of someone's estate is able to pass to loved ones, and the insurance bill in many ways gets picked up by this insurance policy.
That's correct. Sometimes there's a piece of property the family wants to keep. It may be a beachfront home, it may be a place in the mountains, and under normal circumstances, if the liquidity is not there, then they may be forced to sell it. A life insurance trust in many instances can be the answer.
We do a lot of planning with our clients around the potential for things like nursing home. Can you talk at all about how life insurance can be used in that planning or be detrimental to that planning?
Life insurance, when there's a health issue, if it is still owned by the person, is considered a countable asset. The ownership of that policy is crucial as to how the planning is going to be done, and that's really a specialty practice where an elder law attorney would know what to do and how to look at these. But the cash value in many instances can be problematic because it is a countable asset.
And is it something that clients should talk with you about if they're getting into problems with health and having to think about something like long-term care, to review their policies and see what might be done with them?
The long-term care would be a nice way of protecting that life insurance long enough to have it transferred and taken out of harm's way, yes.
Okay, terrific. We talked a lot, people these days are very internet savvy, using the internet to buy everything, including things like life insurance.
Right.
Can you talk to us a little bit? I mean, I know you're an agent, so certainly you have your own bias about it, but
Right.
the advantages of going with an agent to look at life insurance and life insurance needs for an individual.
Well, I can give you several examples, and certainly I would be motivated to say use an agent, but here is something that people do not consider. Several years ago, the carrier was advertising on the radio, call us and we'll do an internet sale and right term this way. And what happened was this client bought $5 million worth of term. Now, his attorney knew right away it was going to create a taxable estate that did not exist before. Had an agent had given him the same advice and written the policy, the proper thing to do would have been to structure it so that the person buying the insurance never really took constructive receipt, never touched that policy. If it had been structured properly, the same policy could have been set outside of his estate to pay all estate taxes, whereas the way he bought it off the internet, their job is simply to write the product. They are not advising, nor do they advise. So he just wrote it, and now he's got a $5 million estate tax issue that he didn't have prior.
It also sounds like there are so many differing types of insurance that you really do have to understand how those insurances will be beneficial to you before you make a decision between term, whole life. You talked about
Right.
second to die, and would love to hear a little bit more about how those policies work.
Well, a second to die policy is a specific policy which is tailored for our estate tax system. Typically, when the first spouse dies, there is no estate tax due, but when the second dies, all the estate taxes are due, and that second to die policy is set up so that it's based not on one life, but on two. When the first spouse dies with that policy, nothing is done, but when that second person dies, then it is there to pay the estate taxes. And typically a second to die policy, also called a survivorship life policy, they're one and the same. They are less expensive because instead of insuring one life, they're insuring two. So it's less expensive.
Are there policies now that are available that do both life insurance as well as what people have now seen as long-term care insurance? Are there policies out there for that?
There are policies, depending on the carrier, that have the ability to have a life insurance element and also a long-term care element. In other words, there's a death benefit, plus there is the ability to pay for long-term care. As far as the planning is concerned, there are pros and cons to both. If it has cash inside of it, then for Medicaid purposes, it's going to be an issue. It is good to have that, excuse me, that versatility, however, being able to go both ways, because this is what people really want. People are saying, well, what if I need care? Well, this policy will provide you with X amount of care. Some of that will be subtracted from the death benefit, of course, but that's the way these policies are working. They're still coming out, they're still evolving.
So there's flexibility that that the policies are being looked to really be able to help for choice in
Right.
the future. Are there reasons why someone would not purchase life insurance?
If I'm sitting down with the client and doing an analysis, and maybe it's a single individual, maybe they have no children, perhaps there is no need for life insurance. Do they need income replacement for someone? Perhaps not. Do they have children? No. Do they have a debt obligation? No. In some instances, there really is no need for life insurance. As you know, life insurance is for someone else and for other purposes. If you have a business to continue, or you want to do a buy-sell, for example, life insurance is actually the better way of funding it than trying to set a side fund apart and saving a lot of money to pay for somebody to buy your business. Much easier, easy to facilitate, and as you know, there's a legal agreement that binds everybody.
Right, making it so succession planning in a business, if someone should become ill and pass away while the business is active, it gives the ability for that business to continue going on.
Exactly.
And someone to be able to buy out the deceased person's interest in that
Right.
building, that business. Wonderful. Let's switch gears just a little bit. There's also the need sometimes to be able to prepare for a child who may have special needs. Can you talk about how life insurance is used in special needs planning?
In special needs planning, it's a different way of planning. There is no rest for the parents, as you know, or the caregiver. It's 24/7, there's no days off, and setting life insurance aside to pay for that individual in case something happens to the parents or the parent. Autistic children, for example, we've done trusts for them in which the life insurance is set apart. A guardian is put in place so that somebody can get funded to pay for all this care. Certainly, no one wants their children to be a ward of the state. And that's where life insurance really comes in special. There are trusts that have to be set up, as you know, that have special language to them, but insurance is the vehicle that really makes the motor run, so to speak.
To help make sure that there's enough funding there to continue to provide care for the child and make sure that the needs are
Right.
being met.
Right.
Wonderful. We've had an interesting situation in the office where we've had clients calling us to say, I've had a life insurance policy for many years,
Okay?
and I'm getting a notice from my insurance company saying my premiums are going up. Or I now have to pay premiums for a policy that I
Right.
hadn't paid for in a long time. Can you give us a little explanation? I know it's a specific question, but something
Right.
about what's happening there.
Well, certain policies are interest sensitive. Universal life policies typically are interest sensitive. So let's say I buy an insurance policy today and the rates, for the sake of discussion, are at 8%. Now, if that policy is performing along at current interest rates, my illustration indicates I'll never have a problem. However, if interest rates start to go lower than that, my illustration isn't quite as accurate as it was initially. So now I'm looking at my policy, or the carrier's looking at it and saying, well, the internal buildup of cash is not what it was. Interest rates are decreasing. Your policy is going to have more expenses. So eventually it may get to a point to where the cash inside this policy is so low that you may get a notice saying, and actually it's a good thing that you do get a notice, but it's alarming when a client is sitting there saying, well, I was told in 10 years it'd be all paid up. Well, that was based on the current assumptions that the rates would hold. Now, in this environment, you can see why there'd be these questions and calls to policyholders.
And another good reason to have an agent to be able to contact to go through this and to really
Right.
understand the purpose behind it.
Right. A good agent will be proactive. If they know the interest rates are down, they have a book of business of these interest-sensitive policies. Explain this ahead of time. As you know, communication is everything. If you communicate and let them know ahead of time what's going on, then if and when they have to pay more, they're ready to accept it. They may not like it, but at least they understand it. But when there's no agent to call them, what we call orphan policies, policies are written by agents. The agents leave the business, and the company gets a book of people that no longer have a service agent. Sometimes they don't get those calls, and then there's confusion.
And that brings another point. You know, people oftentimes think they can buy insurance and not have to think about it anymore. Do you recommend a time frame that people take a look at their policies and how they should go about that?
It almost reflects your will. Anytime there's a major change with a will, you need to have it relooked at, revisited. If you have more children, after you buy a home, many people start having families raising them. It might be a good time to look at it and review it. If you inherit or you start a business, there's a number of reasons to continue looking at your insurance. And sometimes it served its purpose and may no longer be needed. So it's also good to have an agent to tell you that too.
So the good times in life, it changes, those types of things, to think about things like looking at your policy again
Right.
and making sure that it's still meeting the requirements that you
Right.
had. Tell us a little bit, Ken, about the experience when someone comes to see you and they begin to talk about life insurance. What are some of the things that you ask them and go through with them?
Well, if they have children, the first thing I ask them is, as I've done many times, is do you have a will? And that isn't insurance related, but a will is kind of an insurance policy, a way of ensuring that things get left to where they want to. It really is a form of insurance, even though there's no formal policy. I'm very interested in making sure that the plans are done, their children, their family are set, and if there's a need for life insurance, I like to look at what they have as group life, because if the group life is sufficient, I'll tell them stay where it is. You also need to know, is there a convertibility feature to the life insurance that they get on a corporate setting? So a lot of questions to ask. When will the children be the age of majority? When are they going to be done with school? Do you stand to inherit? Do you own a business? Are you self-employed? Do you have any major debt obligations? What kind of a mortgage do you have on the home? All those things factor in to knowing how much insurance, the type of insurance that they should have. I recently got a call from a investment person in New York who already is worth $3 or $4 million, and he's only in his mid-20s. And I've told him, you are always going to need insurance for one reason or another, and he is planning to be a consultant. So he might as well get started now. So we're looking at different types of cash value policies. He's going to want a supplemental policy, and you can use it for income.
And is it true that the younger you start in terms of options and in terms of price, it's usually better to start younger when possible?
It is younger. It is better to start when you're younger, because if you have the right type of policy, then what will happen is, I've had doctors come to me and say, I've got newborn grandsons. I want to put policies on them now so that when they get to be 18 or 19, I can hand them a policy all paid up. So yes, it can happen.
It can be a very big benefit
Sure.
for them. Well, that's fantastic, Ken. We want to thank you very much for joining us today. Could you let us, our viewers, know how they can reach you if they have more questions and concerns?
They can reach me at 978-689-6984. That's my office number. And my email address is kanding@bostonpartnersllc.com.
Fantastic. Thank you so much, Ken, for being with us today. We appreciate all this wonderful information. Also, would like to thank our production crew today, Ed Pascarosa, Rick Deegan, and would also like to remind our viewers that if you have any additional questions, comments, or concerns, feel free to get a hold of us. I can be reached at Kathleen, CATHLEEN, at summersatlaw, SUMMERSATLAW.com. Thank you so much.